What comes to mind when you hear the words private equity? Is it the negative connotations of massive layoffs or stripping and flipping? Or do the big names come to mind like Blackstone and KKR? Well, in this video, we're going to talk about the good, the bad, and the future of private equity. Hi, my name is Nick McLean with 4 Pillars Investors. Been in the private equity M&A space for almost 20 years now. My focus or my desire is to show that private equity is not always good, but it's certainly not always bad, and that finding the right partner in private equity is perhaps the single biggest determinant as to whether or not you're going to have a positive, neutral, or negative view on private equity. Stay tuned. If you're a business owner, at some point you're going to need to sell your business, and you probably have thought about an exit to private equity and maybe have ruled that out, or maybe want to explore it, or maybe think that that's a great option. Regardless, in this video, you're really going to learn more about private equity from a behind-the-scenes perspective, a perspective that you're not going to see as much in the newspaper or magazines or your various online content. Stay tuned and see if you think that my take is interesting and whether or not it will change your view on private equity. Before we get into the examples, I need to make everyone aware that 4 Pillars is what's called an independent sponsor. We do not have a committed pool of capital, so we work with a variety of investors and actually other private equity firms in order to raise our capital for each deal that we potentially work on. So we were working on one deal. It was a structural and miscellaneous steel fabricator working with a family office out of Texas. They really liked the deal. It had some synergies to their other parts of their business and felt like we were developing a good relationship. Well, fast forward a week or two, and this group was really cutting off communication, and not cutting off communication, but they've been very slow to respond and wasn't getting very full answers from them. Well, wait a few days later, and I get an email from their general counsel saying that essentially they didn't need me. They were just going to do the deal on their own, and I can go pound sand. You know, it was a situation where I didn't really have a lot of recourse, because at the end of the day, this was a huge family office, millions, if not billions of dollars in capital under management. If I force something, then they're just gonna abandon the deal and nobody wins. So that was a example of how I got screwed by private equity, because the private equity group thought that they could just do the deal without me. The second example is another time I was working with a private equity firm. There was an agreement that we had in writing where certain streams of diligence they would pay for if they engaged the firm. Well, at that point in the process, I had spent all the money I was willing to spend on accounting due diligence. Now, what I went to the private equity group and said, I said, listen, I have not done X, Y, and Z in terms of accounting diligence. If you want to do that, that's fine. However, you need to direct me or a firm to do that, because I've spent the money that I'm willing to spend. The private equity group said, well, since this other accounting firm has already done the work, they know it the best, let's have them continue to do this work. I said essentially, so you want me to engage them to perform these additional streams of diligence? The answer was yes. You know, had a great reputation with this group to this point, had no real concerns that they were going to try and back out on paying. However, that's exactly what they did. They tried to say that based off how the agreement was written, since they didn't actually sign an engagement letter with this firm, they didn't have to pay. Do they have an argument? I think they do. However, this was a situation where we're building this relationship and there has to be trust. I was not going to have this work done, and they told me to engage the firm and gave me that rationale for why they wanted to engage that firm. You know, I talked to an attorney to see if I had recourse, and they thought I did have some recourse, but at the end of the day, it just wasn't a situation that I wanted to pursue, and that was another bad example of how I got screwed by private equity. The third example is a bit longer. We were working on an acquisition, and a group approached us about a potential partnership. They liked what we had been doing with the current companies in our portfolio, and again, wanted to see if there was a way that we could partner together. together. Well, at that time, we were working on a larger acquisition that would have been much larger than the portfolio companies. The partnership with this other group potentially would make sense. Because of that, started talking to them about the company, the target that we were looking at, thinking about how we were going to structure the transaction, how we were going to manage it post-close, et cetera, et cetera. Well, that was fine. The conversations went well. There seemed to be mutual interest. Thought everything was good. Well, what happened on the deal is that certain things in the business happened that caused us to have to reevaluate whether or not we were interested in the deal, and if we were, at what level of valuation. There was serious turbulence within the business. Ultimately, the sellers decided that, you know what, it wasn't worth it. They thought they would be able to do better elsewhere and decided to go down that path. Well, turns out that group that we thought we were going to partner with had been going behind our backs and communicating, negotiating directly with the target, which was absolutely no way that was allowed by the NDA. Also, we had an agreement in place with the target that they violated as well. So a lot of different ways that we were legally harmed, not just a handshake agreement or whatever. Really was unfortunate. However, what happened on that transaction is that shortly after this other company bought it, they ran it into the ground. Really bad story. It was a situation where they had negative stereotypes of private equity, or exactly what happened here. Folks come in, think they're smarter than everybody else, kills morale, mean to the employees, turned off all the customers and whatnot. And that company literally is a shell of what it used to be. And as it turns out, due to some of those dynamics, it has actually strengthened the competitive position of our companies. So I will say that I still wish we would have been able to get the transaction closed. Honestly, the next best thing happened in terms of what happened to that company, because it made our company stronger. Now, I don't want to say that I don't care about the people that lost their jobs or whatnot, because it was not a situation where people completely lost their jobs. There was enough employment in the area that any lost jobs by that company were quickly absorbed by the other companies. But in terms of our competitive position vis-a-vis our competitors, we were definitely in a stronger position. So yes, we did get screwed, but luckily we turned out okay on that one. You've heard about the bad. Now let's talk about the good. The good are really, I'm going to give two examples of two partners that we have worked with that have been great relationships. First is a guy named Brian Leaguer at KVCI. KVCI is what's called a SBIC, a small business investment company, and they are the lead investor on our investment in EPSM and Turk Manufacturing, which is being rebranded as QPD. Brian is a great guy, hands down, no equivocations. In this industry, it is easy whenever you're negotiating purchase documents to really get upset about technicalities, and there's certain circumstances where Brian was absolutely right about certain points within the purchase agreement. The sellers were really irrational in why they wanted certain things. And hats off to Brian. He never got upset, never got flustered, and realized that these points were relatively minor, and admitted, and was just taking the mindset that even though I'm right, at the end of the day, they aren't really going to benefit us by doing it this way, not going to harm us by doing it that way. So I'm just going to swallow my pride and go with it. Now, that's just one example of how he just really had a great mindset and great attitude in terms of working together, not just with Four Pillars, but also with the sellers. And that attitude has maintained from day one to whatever day we're on right now. I mean, that transaction closed in 2017, so quite a few days that we've been working with Brian. Again, never any issues with him. One of the real joys, one of the real great guys that I've been able to work with in private equity. So Brian, I don't know if you're ever gonna watch this video, but just wanna say thank you for being such a great partner. You've heard the bad, you've heard the good, and we're probably gonna skip the ugly, because I think in this case, the ugly and the bad were one and the same. However, I do want to talk about the future of private equity and really where I see private equity going. In my view, there's one huge trend that, quite frankly, I don't really love. What that is the increasingly corporate feel of private equity. I mean, look at private equity, where it started and whatnot, especially when you're looking at lower middle market private equity. You had a lot of entrepreneurs that saw the promise of some of these companies and what they could be if they were properly capitalized, and if stronger management teams or just more people were brought into the management team to facilitate growth. That's the aspect of private equity that I love. But what you're seeing is that private equity firms are getting larger and larger. You're seeing private equity firms that crop up that have founding principles that are just coming from other private equity firms, as opposed to coming from the companies themselves that have the experience running businesses. And so what you see again is just this corporate feel. No longer are a lot of the private equity principals entrepreneurs themselves. A lot of them, I wouldn't go so far as to say pride themselves as not being operators, but are the first to admit that they're mostly finance guys. And that's fine. I mean, I'm not saying being a finance guy is something I dislike about private equity. Not that at all. It's just the bureaucracy associated with larger private equity. It's the red tape, and it's the concept of sometimes deals are done only because they need to deploy capital. Sometimes deals aren't done because they feel like they can't cover their own in terms of their LPs. And those are the components of private equity that I don't like, and unfortunately that's where I see it going. Another trend I'm seeing is just an increasing emphasis on profits over people. Now, I get it. As a private equity firm, you have a fiduciary responsibility to your investors. You have to take care of their money. You have to grow the business. You have to provide them a return. No arguments there. I mean, I feel the same way. However, there are different ways to go about ensuring that you get a great return. And I will tell you that the approach at 4 Pillars is to focus on the relationships and focus on the people. We feel that if we build good, solid relationships with the management teams, if the management team makes an effort as well to build the relationship with their subordinates and the rest of the team there, we feel like that's a first step towards success. It's certainly not sufficient for success, but in any of the companies that we work with, we are absolutely going to take a relationship first approach and focus on the people first, with the expectation that if you focus on the people, the profits will follow. So you've heard the bad, you've heard the good, and you've heard some trends of where I think private equity is going. What's my final take? My final take is that I firmly believe that private equity can be a great potential exit opportunity for business owners. However, I think it is vitally important that sellers get to know their potential buyer. This isn't just get to know them. You go to one dinner where you have an hour, 2-hour dinner, and you talk about your families and whatnot. I mean, if that's the only thing that can happen, that's fine, but I personally think that's a risky approach. What I would suggest is getting to know your buyer over several months. Let them get to know your business, maybe even over a couple years. That's hard. I mean, that's going to take a lot of proactive effort on the part of the business owner to seek out those relationships. Will it be worth it in the end? I don't know. However, when I think about what success looks like for me, one of the definitions of success that I have is being able to work with the people that I want to work with. If I have a process run for my business and I get to only have like 2 or 3 meetings with my potential buyer, then I really am not going to be in a position where I am able to choose the people that I want to work with. They might seem fine, but how can I really know after such a short, brief meeting with my potential buyer? I can't say that it will always work this way, but if I get to the point where I am selling a business, whether that's the 4 Pillars, which probably wouldn't make sense because we'll just transition that to the younger staff, but for any business that I'm the CEO of, that I am going to have an ongoing role in, I am going to get to know my potential buyer and make sure that that's a firm that I want to work with over the next 1, 3, 5 years. Well, I hope you enjoyed my perspective on private equity. Not sure if it changed any minds or at least made you think about it a little bit differently, but I'd love to hear from you. What is your perspective of private equity? Do you think it's awful? Do you think it can can be good, can be bad, depending on the firm, depending on the person. Would love to hear your thoughts because as a founder of a private equity firm, I'm certainly biased and I have my strong opinions about it. Thanks for watching.